this chapter is under inventory. So the question says that the toy store buy inventory on credit and sell them by cash. So the business record inventory using the movements of FIFO, first in first out method. So on the 1st March, the inventory shows a balance of 1,200 for the sets of 50 units. Okay, the question here asks you to find the cost of sales for the month. So the cost of sales is trying to say the cost price of the batch of goods that you are selling. So okay, so part A. The batch of goods that you are selling by cash is 100 units, but this 100 units for 3,600 is actually the selling price, not the cost price. So the cost of sales is actually always referring to the cost price. So you need 100 units. This is actually split up into, okay, in the beginning you already have 50 units. So you have 50 units and 8 March you are selling 100, so you need to take the another 50 units from the 3rd March because of the FIFO methods that you are adopting. So 50 units. So this is the balance that in the beginning, so 1,200. So another 50 units which you purchase on the 3rd March is 1,250. Okay, so this is the first batch of the selling of the goods that you are selling. So 28 March you are selling 110 units. So this 110 units is actually made up of 30 plus 60 is 90, 90 plus another 20 is 110. So the first batch we are taking 30 units, which the cost price is 810. Then 60 units is 1380, and 20 units for 300. So we need to total up all of this to get the total cost of sales. So the cost of sales is actually taking the sum of this batch of cost price goods. Okay, so the answer will be 4940. Okay, for part B, you need to prepare the inventory account. So inventory account is actually the movements of the inventory. So we need to draw out the ledger account. Okay, remember that when you're doing the ledger account or the inventory account, we are talking about the cost price, which is the price that the company paid for the batch of goods. Okay, so inventory, we actually have the balance brought down of 50 units, 1,200. So the date will be 2017 March 1st. So this is balance brought down. Okay, so this is your three columns. So this is debit, credit, and this is the balance. So the balance is 1,200. Usually I will take note here, this is 50 units. Because when you are selling, right, you need to ensure that you remember the rule is first in, first out. Okay. Okay, so when you purchase, right, you have to go according to the date. So on the 3rd March is the first month that you make the purchase. Okay, so on the 3rd March. So all the purchase is made by on credit basis, so you owe your trade payable. Okay, so this is a 50 units. Same. And since this is a purchase, so inventory will go up. Then your balance will be this plus debit of new batch of goods. So your balance will be 2450. So the next one is on the 5th. You purchase another 30 units. So 30 units is 810 March 05. Still payable. Everything will be on credit basis. So total will be 3,260. So after the 5th will be the 8th, which you're going to sell 100 units. So sell is all cash basis. So we will post it to cost of sales, because that's not the selling price, that is the cost price. You need to take the cost price, which is March. Okay, you are going to sell 100 units. So the 100 units is actually credit because it's going down. This plus this batch. So you are selling the batch is 2450. So you have to take the balance minus, because credit is minus. So you left with 810. Next one is on the 21st March, 20 units. So this time around is purchase again. So this is 21st March. March 300. So this is debit. So now you have to take what is the balance plus the new batch of stocks that you purchase. Okay, so it's 1110. Next one will be 25th. So you continue to purchase another 30 units, which is 840. So the balance is 1950, and the last transaction on the 28th March, you're going to sell, which is cost of sales. Whenever you're selling, right, it's cost of sales, because that is the point that you capture all the goods that you are selling at the cost price. 3850. So you are selling 110 unit. 3850 is the selling price. So you need 100 units. You have to take this, because this batch and this batch are already sold. So what you left with this, and this to make up 110. So after that, your inventory is 0. So all the goods already sold. 3690. No. So I lost one batch. 15 1 3. Oh, this 15 March. there's a missing transaction on the 15th March. So on the 15th March is purchased 60 units. 1380, 60 units. So the balance here have to be this plus this. After that will be this, and we left with the last batch of inventory will be this minus this 1380, this 30%. So the last batch of stock is this 30. So only this 30 unit was not sold. Okay, so therefore you need to do a balance brought down 2017 April 1st, balance brought down 840 debit. Okay, so this is your part B. Okay, the last part of this question is part C. They actually ask you to prepare the journal for the goods sold on the 8th March. So on the 8th March, you're selling 100 units. So, and you're selling for 3,600. So the double entry when you receive for 3,600 is all transaction for sales is cash basis. So cash at bank, debit 3,600, and you credit sales revenue. Okay, but you don't forget this is a selling price. So how you're going to deal with your cost price is debit cost of sales. Okay, this batch we just now calculated is this one on the 8th, so it's this two, so it's 2450, and you have to credit out from your inventory account 2450. Okay, so this is the double entry for the transaction.